presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are what you believe you are. Humans are powerful magicians. You have the power to make yourself what you are right now, but it's not your reasoning mind that controls your power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials up 78, NASDAQ up 70, S&P's up 24, gold contract up $11.50, traded at $18.57 an ounce. You got silver down 37 cents, $23.86 an ounce. Light sweet crude down $3.84, $73.11 a barrel. Notes and bonds. The 10-year note up 18 ticks at 113.06. The 30-year up 1 full point plus 9 ticks at 127.16. You get the 10-year right now yielding 3.7. High for the last 3 months was 4.2, or the low was 3.4 or 3.7. King dollar. King dollar's down 263 ticks, trading 104.259. Euro out here at 106. Yen is at 132.59. The British pound is at 120 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. Well, let's go into the futures first, because these have been bouncing around like a good 10, 12 points every, 15 minutes here. So I suspect that's not going to end. That's how it normally shakes out. When you get a range going, you're just going to keep doing it. And in this particular case, let's see where we're at. We're at, okay, so this bar is finishing. You can see what's happening. Okay, so we're coming into a bar here that had, that was at 1400 hours. So at 2 o'clock, when the Fed minutes come out from the last meeting, you had the bar spike up to a price point of 38.93, then spike down to 38.59, and literally, a heartbeat, right? Bottom line is that's the bar you're going against, and that bar had a lot of volume, 89,000 contracts. Well, we just did 35,000, and what you're doing here, you're going to end at the lower end of that bar. That's saying to me that you're going to, once again, it's going to try to go into these lows again. So I suspect you're going to see a draw down into the 38.48. And this will be a trip, man, because we're at 70, okay? So you're talking about another 22 points that it can go test this bottom once again. Let's go take a look at the NQs. So we take a look at the NQs up here. What do you have with the NQs, which we know are the weakest? Same type of setup, though. You can see that, it's the same range. The bar at 2 o'clock, that got all the way up to 11,064, and the low of that was 11,940. What we just did, now that bar had, 37,000 contracts. We just committed to that with 16,000, and, we'll see how this bar operates. But that's also saying that you're going to be back down the lower end of this bar. Now, let's go take a look at the gold contract. So gold has held up. Bottom line, the volume's good, too. The volume's not bad. That being said, bottom line is that, both days here, you haven't, well, thus far, we'll see whether they can hold the highs of yesterday. We're $2 above it right now. We had a high of 1871. You are at 1858 right now. Now, the swing that it's taken out is 1836. 36? Yeah, 1836. That is the swing that goes back like 5 months ago. If we go to let's go to the GDX, some of these, there's no doubt, volume came into these babies. So if you go to the GDX, we take a look at the GDX, what you're going to see, now, you're taking over the first volume we had is 50 million. The second one was 27. You're at 23 right now. So you do have a contraction. We'll see whether they can hold this. What I suspect, well, let's go to the dollar, and I'll tell you where my head's going here. This is going to be, well, it's tricky already, but it's going to be a little more tricky. So if we look at the dollar, what you have with the dollar is that the dollar, had strength yesterday. It rejected lower price today. So that's telling me that you have the 107 to 108 area. And where I'm going with that, I'm just going that you got a dead cat bounce. A 0.382 is a 107.07. A 0.50 is a 108. If we do get to the 0.618, that's going to be a 109.300. But I expect that is what we are actually going to see. Now, if we go over to silver, this is where this gets interesting. Silver, basically led the gold market up, and silver's down today. It's like, okay, why? So there's divergence. There's no doubt about that. That's divergence. Okay, the high of yesterday, we got up to a high yesterday, had good volume behind it, 69,000 contracts. You traded up to a price point of 24.77. Today, bottom line is that you're pulling back down, and you've done 58,000 contracts, and it's like, that is pure divergence. Some of the higher volume equities out here today, and we'll see whether we actually have volume out here. You have Tesla's up $5.50. You have, let's see, Amazon's flat. You got Apple up $1.40. We have Marvell up 38 cents. You have Verizon up 97 cents. Micron Tech is up 350. If we go inside the Dow Industrials, we take a look at the Dow and the strength inside the Dow. What you have strength-wise out here, you have Boeing putting 49 positive points, Salesforce 31, Visa 28. Taken away from it, United Health minus 106, Microsoft minus 75, Honeywell minus 30. Let's just go to Microsoft for a second. See, the NDX it's just so weak, it's amazing, actually. So Microsoft, look at this, it gapped down. Microsoft's and ABC down. Oh, my God, look at this. Wow. So your 8-point on Microsoft, 263. Your B point 233. So yeah, there's $30. That's going to get you 215. What's this low out here? 213 is the low. We're going after the low, man. And look at this. You get two windows, two gaps. Gap up, gap down. 215 is coming at you, man. That is pretty intense. We go to the NDX 100. Of course, I know Microsoft's going to be right in here now. You get moving it higher. JD.com. What's this? Web? Oh, Warner Brothers. Oh, look at that. We got to find out why that got a hit on it. So Warner Brothers is up by 8.5%. That's been a tough stock since it got spun off from AT&T. Pinduoduo is up 8, and you got Micron up 7. Taken away from it, Microsoft down 4.5%. Datadog's down 3.5%. You have Baker Hughes off 2.7, and Honeywell's 2.1. So I want to go back to. Yeah, I want to go back to Warner Brothers. Let's see what's going on here. Okay, so if we take a look at Warner Brothers. Okay, so lows 882, the high's 27. Well, it's come off the bottom. We'll see where this is shaking. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 107. You get the Nasdaq up 75. S&Ps are up 27. Let's go take a look and see what kind of volume we're going to come in with here. So we're at 533 million. On the NYSE, and on the composite, you're at 4 billion. Okay, so now let's look at this. Yeah, so that's the problem. You know, if I'm looking at this S&P, the low today is 38.15, the high is 38.51. So you're trying to push into the high, and you get a huge contraction of volume. Because if we take a look at this, you're going to see in the NYSE, you have 553 million shares. And the bottom line is that even yesterday we did 955. And, you know, that will do about 800. But that's a big contraction of volume. Now let me look at the composite. Composite, yeah, that's pushing it to its high. So in the composite, you're looking... It's going to be a contraction. It's not going to be as large. You know, we have 4.7 billion right yesterday. What we're doing right now is that you're at 4.013. You know, so that also is it's going to be a contraction. And if we look at the ETF structures, the ETF's about the same. You know, we're going into the B point. You know, we're going into 60 million to get 40 million. The thing to keep your eye on this, the 3 Qs, folks, is coming into the B point. So the B point on these 3 Qs is 266.95. We've made it over that level, but we haven't been able to hold that level. But the reality is that you're only 20 cents away from that coming into the close. You know, so if we go over to the Fed minutes came out today. And inside of the Fed minutes, you know, the thing that is incredible, there's no doubt, man, that, you know, what I find really intriguing, folks, is that when, you know, markets basically tend to go up forever, right? You know, you get these huge contractions, but if you're talking 20, 30, 40 years, they're up. And that has to do... And this is where you're really going to understand about how inflation goes. There's always going to be higher numbers. 2% a year compounded turns into a monster number. A penny compounded turns into a monster number, right? So what ends up happening is that what blows my mind, to a certain point, is that when markets are always going up, right, the mantra is always you don't fight the Fed. Well, bottom line is that that is not the case on the way down. Because the market's fighting the Fed too, but every analyst out there does the same thing. Like I was on TD Ameritrade yesterday, and I do that about once a week. It's about 20, 25 minutes. And the thing that's amazing to me is that the amount of folks that were on just one after the other saying, well, no, interest rates are going to come down this year. And I'm saying to myself, man, why? Why are interest rates going to come down? Prices are not coming down, right? I would say that prices are getting stable, but we're stable at a much higher level. So to think that you're going to go back to 2% or even 3%, just to me is unrealistic, this year. So the way I'm looking at this, which the Fed is still saying, by the way, these minutes here, well, let me go through the minutes again for a second because, so Federal Reserve officials affirm their resolve to bring inflation down. In an unusually blunt warning to investors, cautioned against underestimating their determination to keep interest rates high for some time. See, just that statement there, that's what the market's doing, and that's what analysts are doing. And my point is that it's not that the Fed rate has to keep upping it. Because we haven't had interest rates high for such a long period of time, it's going to take adjusting to figure out how you can make money in a higher interest rate environment and how much it's going to be and what has to be cut. And my take is that we have just started this. It took so long, so picture this. It takes so long for the rates to go up. It takes so long for markets to come down. It takes longer for, as they say, when the tide goes out, who has a bathing suit on? And we just started that. I'd say that just started about 2 months ago, meaning the tide's coming out. We're going to find out who has enough ammunition to keep making money into companies. So, and you can see, looking at the market today, well, the market's not scared. It really isn't. It's not up a lot, but it's not down a lot either. And so I've talked about this many times, is that if this market starts building cause again, you better get out of the way. Because it's in an ABC structure down, but the longer that we go sideways, the higher the probability that the expansion, in this particular case, on the way down, would accelerate. And the right question would be, well, why does it have to go down versus going up? Well, when you take a look at, if we just use I want to use the Qs, and I'll go into the SPY. If you use the Qs, what ends up happening is that the longer that this stays into, a consolidation like this, that we go sideways, right, is that, and the way that you look at this, you always look to say, okay, how are we going up versus we're going down? And, there's not enough information here yet. We have gone down to 47 million shares, and you go up with 42. 5 million shares on a 42 number, yes, it's 10%, but that's still, that variation's still not enough for a conviction to say that, okay, what is strong enough for me is that there's an ABC structure on the way down. If we go over to the SPY and we take a look at the SPY, what do you have inside the SPY? We'll do the same type of exercise rather. You put this up, you're going to see that, we come down on 100 million shares. Yesterday you're up on 74, and today's going to be a problem because today won't even do 74. So, the high of yesterday was 386.43. We hit 385.88. We're at 383. That's a little problem, man. Because we'll see where this shakes out. But there's a problem in the context of the market, analysts, people fighting the Fed on the way down when they're about as clear as they can be, And I get the gist that for so many years, the bottom line is that they're folded, and, they can fold again. I just don't see them. The reason I don't see them folding this time, folks, so what happens every time they fold, first you have a market downturn, they fold, okay? Then you have a housing crash and they fold, okay? See, I can't see them folding. In both cases, we didn't have prices that were going out of this world. Anyone that knows anything about other countries, if we keep getting inflation of 7, 10, 20%, that's a disaster beyond belief for everyone. Stay right there, folks. Come right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 50. You get the NASDAQ up 41. S&Ps are up 18. Let's go to our man Jose in Lakeland. Jose, Happy New Year, man.
Happy New Year, Tom, to you and the crew, the best and brightest. Tom, my Aunt Zatuni sent me another tie for Christmas. I'm re-gifting it and sending it to Zelensky in Ukraine, because if he shows up to Congress in the green T-shirt again, I'm going to pull the hair out of my head.
I love it. And he does have
Tom,
hair by the time, just so you know, hey, Jose has some good black hair.
I do. I got a ton of hair.
I know you
do. Must be on my dad's side.
You know what's so funny about that? So picture this. I haven't seen you in, I bet, over 20 years, but I remember your head of hair. You know why?
You've never seen me. You've never seen me.
Yes, I have. Yes, I did.
No, impossible. I've never met you.
Didn't I see you up in Waltham?
No. My ex-girlfriend, Sue Genova, lived in Waltham. She's the engineer for Cadence, but I never met you. But I'm still waiting for the big 25-year reunion in the parking lot where you're going to pay for some hamburgers.
You know what? You're not bringing something up. I'm gonna talk to Tommy. We gotta have a get together. There's no doubt. I was thinking about this, man, because now COVID's over. All that we have to have a big bash. There's no doubt. Yeah, we're gonna do that. I want to talk to all the hosts. Well, we did years ago, folks. We had all the hosts. We're gonna do something like this. We're gonna get something together, man. All the tigers and tigresses growling the crowd.
Fly some people in.
Yes.
Chuck up in Maine. Tell him to bring some lobsters in his suitcase.
Yeah. We got plenty of people right up in Maine that I was just talking to one the other night, actually, right up in Kennebunkport.
Yes. Now, I never met you, but down the road sometime. Who knows?
Yeah.
When I come over to Clearwater, I'll have to stop by and bring a fruit basket.
No, I think you gotta bring me an Italian sub, man. I don't even eat meat anymore, but I love Italian subs.
Absolutely. Hey, Tom, you've talked a lot about what's happening possibly next spring with real estate. 20%, maybe a 20% price decline. You got interest rates still going up, affordability out the window, but you haven't really mentioned about the tug of war between the number of homes coming on the market, yet foreclosures have to start climbing, do they not?
They are climbing. They're climbing right now. I watch them every day. So, yeah.
But you got Case Shiller out there, the Case Shiller report every month saying that, there's still a struggle of homes coming on the market. So who wins this tug of war?
I agree. Listen, I'm having the same tug of war in my head. Folks, this is a really cool question he brought up, because this is what it is, right? We hear the articles all day long, and we know that there's not enough housing, right? And we know that builders have not built enough houses for the past 10 years. Okay, so we have that shortage, right? And
yes.
Then when you actually do the numbers, this is what, if you're going to buy a house, sell a house, whatever you want to do, folks, right? I think the easiest way to do this, that you can stay with common sense to understand what we all can afford, is when you do the numbers, when you do the numbers on a $500,000 house, right? Which seems like everything's a $500,000 house now, right? It might not be but let's just, I'm taking it, you can take any number. I'm taking a $500,000 house because where we are here, you almost can't get anything for less than $500,000, okay? So when you take that, and I take that at a 6.5 mortgage, right? Those numbers are insane. I mean, you're talking about, instead of paying $2,500, you're paying $4,500 to $5,000 to live. Like, okay. So if you're paying that much to live, like, where's this going to go? And I don't have the answer to that. Meaning, every time I look at that number and I do it, I'm saying to myself, okay, how can people afford that much higher number? Because of the interest rate structure. And so when I do that, I get the idea that people say, well, interest rates have to come down. Because, but I don't think they're going to come down, because I think the inflation deal is a much bigger deal that we'll all be broke, man. I mean, if you run inflation over and over, it's a bad scene. So, that is the essence of whether you get more aggressive or not. Because some mornings I wake up and I say to myself, okay, man, hold it. I should be more aggressive right now. But then I said, no, I can't be more aggressive, because every single time that, and I almost do this every other day, because me and Bess will have to come on Friday, because we go back and forth. I said, okay, let's do the numbers on this one. Let's do the numbers on, and it doesn't matter. It seems like, I don't care if you're getting a $450 or a $600 mortgage, you're paying a fortune, man. It's like, okay, so where are you making that much money to afford that house? So my take is that, yes, we're still going to back down on numbers, and rates are going to stay there. Now, that being said, if we can get this rate adjustment right, I think there'll be a lot of money made. Meaning, so let's picture, if I'm right in the context, that rates stay at this 6% for like a full year, right? If the rates are just going to crack a little, this is when real estate will explode, folks, because we'll end up happening, if the market has a perception that we're going to go from 6.5, let's say, I'm going to go out a full year, that we're going to go from 6.5 to 4.5, well, immediately that $500,000 house is going to go to 650. I mean, I'm talking about in 2 months, because it's always about what we can sign for,
Okay, so it's about affordability?
It is. It is.
Okay, so I got a couple Spring Hill houses, new construction going. I'm not worried because I believe Mary Daly, the Fed out in San Fran, got it right. Rates are going up, and they're not going to pivot anytime soon. I don't think they can afford to, but I'm not worried. But I'd like to see price is going to start climbing at some point in 2024.
Yes, especially where you are. Where he is, folks. So picture Spring Hill. So when you're going north, coming out of here, right, out of St. Pete or Tampa, what happens, Spring Hill is a development that they started maybe, 15, 20 years ago, and it's beautiful. You can actually go on the road. So what ends up happening, folks, is this. You're going, we go up to Crystal River a lot, so I go by it, and one of my main guys, Jose, used to live in Spring Hill, because when I first started this, I'm going back 12, 13 years now, right, I could get a lot of help out of there, and they would come down because we were paying more money than they were paying up there, right, because there was nothing there then. Then Spring Hill turned into a major, everything's brand new, it's beautiful. Yeah, you're in a great spot, man. And now you're getting sandwiched on the other side because they put the Veterans Highway coming all the way up. Now that's brand new, but you're in a good spot, man. Yeah, for sure.
Yeah, the Suncoast Parkway. Well, I'm not living there, but
but I'm talking about even for rentals. Yeah, right. It's
a good spot. Suncoast Parkway. You're minutes from Weeki Wachee. You're minutes from US 19. I'll stick my kid up there in one of the homes. So there's a lot of information to synthesize, but by 2024, we're going to see price acceleration, I'm hoping. But look, Kay Schiller said 2 years ago, this country is 2.5 million units, meaning single-family homes, short of what the country needs. It has to be 3 million by now.
I agree. Listen, man, so what he's bringing up is so important because I agree, man, but it's really the aspect of, okay, are you going to blow your brains out right now with this, meaning get more aggressive? And I don't think you should, because I think that you're going to get better deals like even 3 or 4 months from now. So,
better deals on labor and material?
The labor's not going down.
I know. I've heard you talk about it.
The material, labor. Once labor goes up, it doesn't go down, man.
I got you. Great deal. Keep up. Thank you.
Have a good one, man. Have a safe one. Stay right there, folks. We'll come right back. We get the Dow down 10, Nasdaq's up 13, S&P's up 9. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Sit down. Dow's down 28. NASDAQ is up 3. S&Ps are up 7. Let's go take a look at, we're going to do Ulta, and then we're going to do Tesla. So if we do Ulta Salon, this is pretty impressive, okay? The low for the last 12 months is 330. The high is 483, which was established on December 13th. So this is an equity that is at all-time highs. Revenue-wise, this is how this works. You're at $10 billion. Taking in $10 billion, they're making $22 a share. Pretty intense. Let me see this. So you have 20 PE, and they're growing by 8%. So the question here was, is this a double top? This looks to me like it's going to go to 510. You're at 480 right now, and this is how I'm getting 510 on it. Take this back, put it on a weekly. You're going to see how bottom line, we took this whole range out, so that the top of that range is 451. The bottom is 375. Approximately, what I say, so it's $75, right? Yeah, for 1 second. 25. Yeah, $75. Gets you 420. Gets you 525. You know, you broke out. Let's see the volume. Had the volume on it, so 525 is the number. Pretty impressive. Tesla. We go take a look at Tesla, and the question here with Tesla is that the Tiger wants to turn around and look at buying some puts. So you can't buy puts. You know, when this broke the B point, I brought this up on the air. This broke the B point all the way back to the 13th when Tesla was at 175. I went on and looked at the put and calls, right? It's impossible to make money buying puts. And this Tiger's looking to go out on 323. Because it was already priced, it was priced in an incredible way. I was thinking the exact same thing. I was thinking that, hey, man, I want to go out there, and what ended up happening here, I'm going to show you how expensive they are. It's insane. I mean, it's just unbelievable. So here, watch this. So let's see how far I can just on this one. On this one here, okay, so I can go out to May right now. I can change this, and I will change it. But let's say you just go out to May, and right now you want to buy a 70 put. Well, 70 put is going to cost you 420. So watch what happens here. So that means that the bottom line is that it has to go to $67, right, for you to make money, and the ABC down is $50. So that's not worth the trade. That's because there's so many folks. You can see how active this is. I mean, the put and call ratios here are so huge, it's unbelievable, man. So the only way that you can actually go short Tesla is you either short the stock, or when you think that it's a good day that Tesla's going south, is you go TSLS, which is going to be, this is the Tesla 1-to-1 bear, And what the difference would be This guy's really intriguing. Hey, you see that it's still 1-to-1, but the difference is that this doesn't rely on a short position and all of this stuff. Okay, so the bottom line is people saying you can do a debit spread and then you can. Okay, but the bottom anyway. If that's my take is that when you have the premiums that are that high, it's just not worth it. That's the real bottom line. So this one here, TSLS, you can see this is the short position, and and what, a month it just went from $31 to $52, and that's a 1-to-1 that you don't even have to worry about. Well, you'd have to worry about short squeezes, and that'll correlate to Tesla on the other side. But this is what the difference is that in Tesla's case, okay, Tesla doesn't even have a high short position. That's the bottom line. It's only, you see this 2.72. Tesla's just done. Tesla's over. It's the whole game is over for Tesla. And, we're going to read this in history books. That's going to be phenomenal. The amount of bread that actually was lost in this equity. Because if we take a look at it, if the ABC comes into fruition, which it broke the B point yesterday, you can see this. I mean, yesterday we had 232 million shares versus 208, right? And if you take this, it's like, oh my God. And by the way, when I bring this up, not that I'm going to jump on Kathy Wood again, but the bottom line is that, like, total insanity, she bought even more. Here, let's see how many she bought, because the amount, here it is right here. I mean, this is like insane. Okay, so, okay, this goes. Where? Okay, here we go. Okay, so here we go. The first day of trading, which was yesterday, right? She bought 176,000 more shares. 176,000 more shares. Like, that's total insanity. PHDC. Let me see if we can pull up what she's just got here. Let's see. So what I just did here, let's see. Largest change. No, I got to do the largest change buying. Where's December? There's January. Let me do this again. 1 second. I'm going to try to do this quick, folks, because I just want to see. No, thank you, Duffy, for the amount of money. But what I'm trying to find here is how many shares she actually owns now. Because this, I mean, think about this, man. I mean, okay, wood. Where? Arc. Okay, not that one. Oh, I know. 1 second. Oh, there it is right there. Okay. So, see, this isn't registering right now. I wonder if she bought them in. This blows my mind. Oh, I see what's going on. Oh, my God. I see what's happening here. So here you go. Look at this. Can you see this now? Okay, so she's at 5 different funds here. Innovation Fund, Autonomous Fund, Next Generation Fund, Venture Fund. So yesterday she bought 143,000 in the Innovation Fund. She bought 31,000 in the Autonomous Fund. She bought 1,700. So, I mean, she's been buying all the way down, man. I mean, it's just unbelievable. And, this has been going on for a long period of time. And I think it's just going to, when you own that many shares and you get down $1, that's $500,000 per dollar, right? Dollar cost average. Yeah, right. Anyway, you get, it's some heavy business, man. It's some heavy business. Let's go to Keith in Cedar Rapids. Hey, Keith, what's going on, brother?
Hey, Tommy, how are you?
I'm doing great, man. Yourself?
Good. I'm doing great, man. Thanks.
Good.
That ARC is a disaster. I know people in it. I just feel sorry for them. But question on a put on Hershey.
Yes.
I wanted to walk, if you wouldn't mind walking through a trade like that. I'm dipping my toes into it.
Sure, absolutely. Stay right there. We'll get a quick break, and I will come right back from the break. We'll get this Hershey put going. Stay right there, folks. Come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're talking with Keith in Cedar Rapids, and we're talking about Hershey. So tell me what you're looking to do, Keith, meaning in the option market.
What I'm looking everything I've done option-wise is limited. It's always been for protection.
Yes.
So what I'm doing is dipping my toe into some directional calls, basically. And I know you mentioned the other day that Hershey was in for some trouble. And so I'm looking at something near the money, say slightly in the money at 240. And
now you said calls. Puts, okay.
Put. Sorry if I said that.
No, that's all right. That's all right.
Yeah, but so.
So let me ask you this: Are you trying to go in the option market to buy a put or to sell a call so that you can own Hershey at some point at a less expensive price?
No, this is strictly a speculation on.
Okay, so
on Hershey down.
Then the way to do this is that the way I would do this is that yes, it was down a few bucks yesterday. Today it's down $4.50. You get I like trading them in the money. Okay, so it's just
wait for a bounce.
You can wait for a bounce. Like it's at 222 right now, right? So if I was trading this today, you could wake up tomorrow morning, right? And this is where this gets really intriguing, folks, okay? Because if you're just really day trading them or trading them, you bottom line, you say 222, okay, you look over here, okay, 220 right now only costs $2.95. So that is saying that you're only paying 20 cents for that. You see what I'm saying? Because you can put it somewhere at 220, it's trading 225.75. You see how that works?
Yep.
And then yes, that means that's bottom line. Well, this one here, that's interesting, man. That's out there. That's out there for 30 days. But yeah, that would be the gist of it. And what you definitely want to do, Keith, listen to that option show. I listen to Tommy. Tommy trades a lot of options, okay? But listen to that option show that we have on at noon also.
Okay.
Okay, man. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 in the morning. Great show, folks.